April 21st. We are the smart-money.trade, and I have a unique topic today for you guys. How do you trade the gap ups? How do you trade the gap downs? And when is it gap and go? And when is it gap and crap? Right? It's very it's very tempting when stock gaps up, or it's very to buy it, and it's very tempting when stock heavily gaps down to actually short it, and that's kind of the human psychology, that it works that way. But I wanted to review today, as market today on April 21st actually gap up and didn't really go any up afterwards. Came down heavily, and some of the stocks even closed pretty negative. Some closed. I'm looking at Tesla that you can see on my screen. Still closed a little bit positive for the day, but would you have bought at open thinking it's a gap and go? It's opening 10% up and going. So how do you identify using the smart money trade tool that, hey, this is a gap and go, or this is gap and crap, or I really need to wait out to see if I'm actually going to you know trade this, or which side I'm going to take the trade on. As you can see, opening price, the tool actually prints out the opening prices. So let me just highlight right here. So this is, we are looking, we are looking at a 15-minute daily. White lines here are smart money lines for daily levels, and green lines here on an hourly chart are monthly. And then we have this golden lines. There are reason why they are color golden, because they are the magic lines actually. The weekly lines for 1 hour, right? And then we have the prints, you know, right here. So you can see the open price for weekly, open price for daily right here, and then we have the open price for the month. You know, so they are pretty accurate, and there's a reason why they are here with all these smart lines. So where the stock was open for the month, day, and in a week. So Tesla had earnings. I don't even know the numbers. Maybe good, maybe bad. Nonetheless, it actually gapped up. Everything shows me bullish. I have some bullish signals. You know, everything is good. Why can't I just have a 10% gap up and go for another 10%, so everyone in the market can make money, right? And it's so easy. I guess I hope it was so easy, but it's not, right? So let's look at this. So so daily price. This is after hour disabled. So the 6:30 a.m., or I'm in a you know uh, PST time zone, but 6:30 we have the stock opening at 1074. That was the opening print, right? Now, looking at it here, I am looking at, there are three levels here on smart money, which is 1076, 1077, it's 1078, whatever, and 1079, right? Three levels. Coming back to the weekly, I have this lines here, all of this, right? And those are the really magic lines. So let me just expand a little bit. There are like 4 or 5 in there, right? So there's this one here at 1087, 1090, 1091, 1095, 1092, and then there's one at 1100, whatever. So think about this: a stock that is opening up a 10% up, so almost $110 or $100 up. And very first sprint in the morning you see is at 1074. It it cannot even beat a 1076 line, or it's not even able to open above 1076 line. It's not even able to open about 1080. It's not opening about 1090. So why is that a 10% open stock cannot for the sake of it open at 1080 or open at 1085 or open at here 1094? Why? Because there are sellers here, and this smart money lines, the reason that it cannot open is because there are sellers here, and then they will actually sell the crap out of it. So if it would have opened 10 about 1094, would have been a totally different story, right? And that's why this opening prints are here. And that applies to monthly, that applies to weekly, that applies to daily. We happen to talk about daily today because it kept up on a daily basis. If it was a new month or a new week, Monday, or brand new month, May 1st, we would talk about other stuff, right? But the daily price is always the accurate because changes every day. So that's kind of the reason why I was not so tempted. Like, okay, I'm going to buy calls, I'm going to buy the stock, I'm going to buy whatever, right? That's it doesn't work that way because that's what happens. Like, you have to pay attention to where it opens, the very first print, which is automatically recorded for you on a smart-money.trade, and then you can have to watch. So what happened? Buyers, I would call this buyers retail buyer because they probably don't know that these sellers are here. They probably think that it's going to moon or it's going to 1200 today, like the last earning that it did. Um, so when I saw this, it came. If you look at it in a smaller time frame, it actually this is 15 minute. So even in a 15 minute, it tried to break through 1090 levels twice or maybe three times. I actually saw it three times on a smaller time frame, like 5 minutes. So I tried to do break three times. Now you know on the first time you watch, second time you watch, third time you watch that it's not able to break this smart money line levels, right? We are not jumping on any conclusion just because there are levels above it or just because there are lines above it. No, we see how it interacts with it and then we make the calculative decision, right? So first time, second time, third time. And if you had this tool and if you're watching this and then you see this, then you could have be like, okay, I'm going to take my risk and I'm going to buy a put, or I'm going to short a stock, or I'm holding it because I was so bullish on Tesla yesterday and now it's not able to cross it, so I need to probably book some profit or all of it, and then if it actually clears this, I can always get back. So what do I have to lose? $2, 1090 if I sell it, or 1088, or even 1085 if I sell it, and then I can jump back after 1093 or even 1095. For those $5, you actually could have risked all your position, and then it could have ruin your day, or probably not let you make the profit that you actually entitled to make it, right? Or if you were not in the trade, you could have taken the trade here, like I will cover it, I will put my stop at 1096 or even 1097, or let's just say 1100, $10 risk, I will take it. At 1090 I will short it, or you could have been like, okay, I'm going to do 1085. But you get the idea, like how to trade. Like I'm telling you how to trade with this smart money lines, right? So one time it rejects, second time it rejects, third time it rejects, now it's a good time to actually go ahead and short this thing, and then keep it going, right? Keep it going. And then look at this. There was this buy, but of course that buy comes automatically when the price is gapping up so much, right? That you buy it. But then you could have actually cover it here, or right here, which the buy came at 1002 or something. But nonetheless, like, you don't have to hold on to all these things. Like, there are other lines here and they acted as a support. But that's not the point of the video. The point of the video is, when is gap and go? How do you identify a gap and go or gap and crap, right? And this is how exactly you should spot it. And it should be any system or any tool that you're using should be able to tell you this. If not, dump that, because that's never going to let you make money, or that will never let you be on the right side of the market. So I hope this video or information was useful to you, valuable to you. And if you want to see more videos, please make a comment and let us know, what topics and how we can make your trading journey easy for you, and so you can make the calculative decision on the time, at the time then where it's really needed to be on the right side of the market, right? All right. So all the best. If you want the tool access, we have a free Discord. So go ahead and join the free Discord. It's in the comment. The link is in the comment. And yeah, we'll see you over there. We analyze any of the stock over there, and then we're gonna, yeah, email us, and we're gonna, work on getting you this tool access on TradingView. So go ahead and do it, and I hope you had a positive day today, and all the best for Friday tomorrow. Thank you. Bye bye.